One of the biggest assumptions business owners make is this: capital stays where it was created. I don't believe that's true, and history doesn't support it either, because capital has always behaved in the same way. It moves toward opportunity, it moves toward certainty, it moves toward stability, it moves toward environments that reward productivity, and it moves away from environments that create unnecessary friction. The mistake many business owners make is believing this only applies to billionaires, multinational corporations, and institutional investors. It doesn't. It applies to every business owner, every investor, every entrepreneur, and every family trying to preserve what they've spent years building. Because whether people realize it or not, every major financial decision is ultimately a decision about where capital feels most secure, most productive, and most welcome. And that's why understanding how capital behaves may be one of the most important skills a business owner can develop. Hi, I'm Virna White, CEO of WealthSafe. In the previous episodes, we've discussed why more business owners are creating exit options, why they're looking beyond Australia, why timing matters, and why structure matters. Today, I want to discuss something sitting underneath all of those decisions: capital. Because if you understand how capital behaves, you begin to understand why business owners are making very different decisions today than they were making 10 or 20 years ago. And once you understand that, many of the changes happening around the world start making a lot more sense. History teaches the same lesson over and over again. Capital is incredibly rational, much more rational than people. People become emotional, governments become emotional, markets become emotional. Capital rarely does. Capital simply responds to incentives. Business owners who understand that stop becoming emotionally attached to one way of operating. They start building systems that can adapt as the world changes. When an environment rewards innovation, investment, and productivity, capital tends to move toward it. When an environment becomes uncertain, restrictive, or inefficient, capital tends to look elsewhere. Not because capital is disloyal, because capital is practical, and business owners should think the same way. One of the most common assumptions I see is Australia has always worked for me, so it always will. Now, to be clear, Australia remains one of the best countries in the world. It's stable, it's safe, it's prosperous, it's an incredible place to build wealth. But successful business owners don't make decisions based on what worked yesterday. They make decisions based on what is likely to work tomorrow. That's a completely different mindset, because every environment changes, every economy changes, every opportunity evolves, and the people who adapt tend to outperform those who assume nothing will change. A generation ago, most business owners had limited choices. Their business was local, their customers were local, their banking was local, their investments was local, their opportunities were local. Today, that's no longer true. A business owner in Melbourne can service clients in Singapore. A consultant in Sydney can work with companies in the UK. An entrepreneur in Brisbane can build a global audience. An investor can access markets around the world. For the first time in history, geography has become significantly more flexible. And when people gain options, they begin evaluating those options. That's exactly what's happening today. Most people ask, where is the lowest tax? I think that's the wrong question. The better question is, where is capital treated best? Because those are very different conversations. The lowest tax environment isn't always the best environment. What business owners often value is certainty, predictability, stability, access, efficiency, opportunity. Those factors frequently matter far more than a percentage point on a tax return, because successful business owners understand that preserving opportunity often creates more wealth than chasing small efficiencies. This is where many people get caught. They continue operating as though the world hasn't changed, as though opportunities are still limited to one country, as though wealth must remain concentrated in one jurisdiction, as though flexibility isn't important. And then one day they discover they have fewer options than they expected. Not because anything went wrong, but because they never built flexibility into the system. And flexibility is becoming increasingly valuable, not less valuable. The most sophisticated business owners don't think in terms of countries. They think in terms of optionality. They don't ask, should I leave Australia? They ask, what options would be available if I wanted to? They don't ask, where should I move? They ask, how do I create flexibility? They don't ask, what's the cheapest solution? They ask, what's the most resilient solution? That shift in thinking changes everything, because once you start focusing on optionality rather than reaction, the conversation becomes strategic instead of emotional. This is perhaps the most important point in the entire episode. The business owners creating international options are not necessarily leaving, they are preparing. The investors diversifying internationally are not necessarily abandoning Australia, they're reducing concentration risk. The families exploring second residencies are not necessarily relocating, they're creating flexibility. The goal isn't escape, the goal is optionality, and that's a very different conversation. One is reactive, the other is strategic. The world is becoming more connected, more mobile, more competitive, and more uncertain. In that environment, flexibility becomes increasingly valuable because flexibility creates resilience, flexibility creates opportunity, flexibility creates choice, and choice is one of the most valuable assets any business owner can possess. The people who tend to thrive in changing environments are rarely the people who react fastest. They are the people who prepared earliest. The lesson isn't that capital leaves. The lesson is that capital moves, and it moves toward environments that support its objectives. The question every business owner should ask is, am I building enough flexibility into my life, my wealth, and my structures to move with changing opportunities? Because opportunities will continue changing. Governments will continue changing. Markets will continue changing. The only thing you can truly control is how prepared you are when they do. One of the biggest misconceptions in wealth creation is that success comes from predicting the future. In my experience, success comes from preparing for multiple futures. And that's exactly why capital always finds a better home. Not because it's chasing certainty, but because it's always searching for opportunity. The business owners who preserve the most wealth over the long term are usually the ones who preserve the most options, because that's what this entire series has really been about, optionality. I'm Virna White from WellSafe. In our final episode, we're going to bring everything together. We're going to discuss why the future belongs to those who have more options and why the greatest advantage a business owner can create in an uncertain world is not a structure, a country, or a tax outcome. It's choice. I'll see you in the final episode.